In the meantime, let's take a look at our 60-minute chart of the S&P 500, and you can see this choppiness in the week that we have had as it has continued to edge to the upside in here. So you can see pretty good strength in there in the market. That came late today. Here is Friday. You could see that big gain right over there. On Monday, this was probably the main event, and here overnight, Sunday night, Monday, as the Chinese government intervened to buy stocks, and the yuan firm that got this rally here on Tuesday. Then here on Tuesday, the markets, that continued on the upside. That was actually Monday, that rally. And Tuesday, you can see the big upside move in here. There was some commentary right here that the president came out and said he wants the Fed to stop raising rates. The bonds at that point dipped and the dollar fell, and that lifted the foreign markets as we got the bounces in the yuan and the lira and foreign markets moving up. And then you had this rally here on Tuesday. But then the news came out about Stephen Cohen's plea deal, which implicated Trump, which may be meaningless. That's yet to be seen, but you could see what happened to the market as it plain out got scared by that news. It couldn't stay down, however, and we saw the markets move up again. New home sales sentiment slumped. It brought the market a little bit of a dip there, but strong retail earnings and rising oil lifted stocks, and they shook off that Cohen deal news and then moved up for at least the first half of the day. Fed minutes came out there. There was, comments about rate hikes coming and concerns over tariffs, but that only was a temporary dip as we saw the market again come back on a very similar news on Friday. It's amazing. Here on Thursday, you can see there was a big drop here in the morning and a big in the yuan, and the dollar popped big and the metals went down, and that was kind of a throwaway at that point for the metals. As they firmed up big here on Friday, here we had this interesting day is that the indexes edged lower. The advanced decline lines were 2-to-1 on the downside, but then Friday they reversed and moved to 2-to-1 on the upside. So we're getting this very, very choppy action on these internals. Here's where we got on Friday. The yuan rebounded, and China to reset their stabilization program, which they backed off of before when they wanted their yuan lower. So the Chinese yuan strengthened. Here, U.S. trade talks broke down again. They were sent those really low-level guys to talk, and they had nothing to talk about that they could agree on. And then came the Powell speech at Jackson Hole right over there, and the markets, really loved it. Stocks and gold jumped. Powell comments, seen as dovish. Strong economy continues. No risk of overheating economy or inflation. Rates gradually will go up based on what they see, and also made a comment that they're going to do what it takes on either side of inflation. So that's, just a statement on a very activist Fed. Got this rally going up, and then at midday here, it turns down. We have about 2 hours left in the trading session, but it seems like every dip brings buyers in, so I don't have a lot of confidence that this is going to continue on the downside as this market remains so incredibly strong. So that's the 60-minute chart, 24-hour chart of the S&P 500, the ES future. So the stock market, we thought, was going to move to the downside and then have a normal shaped cyclical pattern. Normal shape being one that has been moving up and down in the area of about 19 to 20 something days, 19 to 22 days, with an average at around 20. I'm going to show you that pattern right now, and you will get a sense for what I was looking at here. So there is this is of course the busiest chart that I have, with tons of notes to myself and some really clear patterns in here that have worked tremendously well. You can see in here the cycle low dates marked off, days marked off, as this one right here was 22 days, this was 17 days, that was 22 days, that was 21 days. You see that right there? And that would have meant that we would have a decline into sometime that started last week. We had this big up day on Tuesday, and then this day right over here on Friday that we're getting right now. So you could see this is an 18-day off of this low. That is very rare and massively strong. You could see the momentum turned up over here. That was at 2765, and then it rallied after that for 110 points up. And 18 days off of this low over here says that the strongest likelihood is that it will have a brief decline of 2 or 3 days and then another rally. The strength of that rally will tell us something about the strength of the market. We think that September is when the risks increase. In the meantime, this is one of the strongest configurations we have seen in a long period of time. That huge rally right up there. This was a 17th day. You see this big up day right over here? That was a 17th day right there. And then what it did was come down for 3 days after that, or 4 days. That was an 18th day, sorry. And then came down for 3 days to the 21st day. So that's basically what we think is going to happen. We're going to call for a decline into midweek and then another rally back. Momentum is strong. You could see that slim ribbon. It keeps using that for strength and moving to the upside. So all of that gives a picture of strength. That looks like a minor dip and then another move to the upside after that. You can see a lot of detail in our stock index report on that, and there's one more chart that I want to show you here were I to be able to move that over for you to see. And this is, I want to get that in place for you to see properly. This is our market condition indicator, the S-Slim MCI. You can see it here on all 4 indexes. The top left is the S&P 500, the top right is the Russell, the NASDAQ, and the Dow Jones Industrial Average. This is a very unusual indicator in that it uses multiple time frames to give you a sense of strength or weakness in the market. One of the key things in this is the swing zone, which is between plus and minus 25. That's this and this right over here. When it gets into the swing zone and breaks out, like right there, well, to the upside, it tells you that the internals are very strong. In other words, you dip, but when you dip, the more dominant forces of the bigger patterns, longer patterns, take over again, and then it moves back to the upside. These are very strong readings. The S&P 500 has been holding in the 80s all the way up to as high as about 90. You see a minor dip in here in the NASDAQ and then getting all the way back up over here to 88. Same thing in here for the Russell and for the Dow Jones Industrial Average. When they can't even dip into the swing zone, gives you a sense for how immense the strength is. So you see this big drop over here in the Dow. It didn't even get it to the swing zone. That says that there's just huge strength in there. Now you can create this with the market condition indicator and compare different groups of stocks and compare stocks within a group or compare other indexes or commodities. It's for people that have a perspective of swing trading, really, and it just shows you the huge strength that we're seeing in the stock market right now. We actually put this can be updated live for level 4 members on your account, on your Thinkorswim platforms, and for stock index report people, you can look at that and you get it updated once a week on Thursday morning, so you get a picture of it as far as that goes. So this is a great indicator, and man, I tell you, if you only look at the internals or only look at the technicals in this market, you can see momentum strong. You could see the market condition indicator indicator strong. If you look at the S-Lim option bias indicator, which is another indicator that is a little longer term indicator than this one is, rock solid, all sitting at either P3 or P2, which is either very strong or strong and only slightly overbought. Those are just massively strong numbers, and it's going to take something to really change in here to break the internals of this market. So no matter how skeptical I am, no matter what you hear from me as far as my belief about corrections coming or any of that, this stuff is just rock solid. And if you want to just have the technical picture, then I think it would be important for you to become a member at some level and get some of these indicators for yourself to use.